What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about the upcoming week that is going to be packed with economic data because we've got the Case-Shiller Home Price Index and of course the GDP numbers are also coming out, and August is pretty much wrapped up here. We do still have a few more earnings to break down in the week ahead. So hope you guys enjoyed this video and find it helpful. Don't forget, we do have our Patreon and Discord right now, 16% off on an annual basis, and that will expire at the end of this month. So 3 to 4 more days left if you want to take advantage of that as well. And I also want to point out that Labor Day is right around the corner. And for that, we are also giving one of the biggest discounts for our fundamental, technical analysis, and options courses. 50% off on all individual courses and 60% off on the entire bundle if you want to take advantage of that as well. And the coupon code is going to be LABOR4. All you have to do is type in LABOR4, all caps, and you will get 50% off on individual courses and of course 60% off on the individual bundles as well. We've got 2 bundles that will pretty much give you access to all the courses. There's over 120 lecture videos, video lectures, of course, tons of hours of content, and literally everything I know here for fundamental technical analysis and options trading is literally going to be on those videos and lectures as well. So everything is available for you on sale. So links are going to be down below. So this right here is going to be the earnings calendar. So we do have, of course, NIO reporting on Tuesday before the bell. I already did a video on NIO earlier, so make sure that you do check that out. Best Buy is going to be reporting, Big Lots is going to be reporting, BMO, and of course we've got the JM Schmucker Company, very nice dividend stock. We haven't really talked about it much, but they do sell a lot of peanut butter, a lot of really cool products that I will be doing maybe a video in the future. And this right here, Hewlett Packard, so HP is reporting on Tuesday after the bell. We got Box, we've got nCino. It's another fintech company that we haven't really talked about all that much, but I'm sure they do also have a lot of potential. So we'll take a look at that earnings as well when the day comes. And then on Wednesday, we've got, of course, CrowdStrike. Did a video on them yesterday. We got Salesforce, Okta. I will be doing a video on them later today. Chewy, Viva, I've done an analysis on before. We got Five Below. We got Pure Storage, Express. Some of these companies. And of course, on Thursday, we've got Dollar General. We got Polestar. Did a video on Polestar earlier today. Got UBS. And that's pretty much going to wrap up the entire week. We got Broadcom on Thursday after the bell. We got Lululemon, one of my favorite companies. Fundamentally, it's phenomenal. We'll be taking a look at that company as well. We'll do a video on them very soon. MongoDB, very nice company, very well-run company. Not profitable though. We got SentinelOne, Dell, VMware, and that's pretty much going to be it. But we do have quite a few interesting companies on the pipeline, and Dollar General, as I already mentioned, is also reporting before the market opens on Thursday. This right here is going to be the economics calendar. So we do have the Case-Shiller Home Price Index. We got the consumer confidence, and we've also got the JOLTS numbers coming out. It's not the first Friday of the month, is it? It is. So it is the first Friday of the month, but we don't have a labor market report. It's going to be the second Friday this year in September. So second Friday of September is when the report's going to come out. Actually, wait a minute. Hold on. What am I thinking? What am I doing here? Hold on 1 second. Let me take that back. There is going to be an employment situation report coming out at 8:30 a.m. Eastern. So it is going to be a labor market week as well. There you go. So again, you're getting a live reaction, as I'm kind of surprised, because usually when the Friday falls on the 1st, they kind of skip that Friday and the report comes out on the second Friday of that month. It's happened before. And this Friday, apparently the labor market report is coming out. Employment situation pretty much means non-farm payrolls. It means, employment numbers, unemployment rate. It's going to be the wages. Everything is going to come out on that day. Again, I'm still not sure because in the past I have seen that happen when the Friday falls on the 1st. They skip that and the labor market report comes on the second Friday of that month. So again, I'm kind of skeptical. I'll definitely confirm and let you guys know. But we do also have the PMI manufacturing final numbers, ISM manufacturing index numbers, construction spending, and more importantly, we've got the GDP numbers, gross domestic product, in the US coming out on Wednesday, August 30th, as well as the MBA mortgage applications as well. So it is going to be a pretty packed week, especially if you account for the employment situation numbers also coming out. So quarter over quarter, this is going to be for the second quarter as well. So consensus, 2.4% with personal consumption expenditure, PCE sitting at 1.7%. So those right there obviously are going to be some numbers, and markets are again very eager to see what the Federal Reserve ends up doing in September as well with respect to interest rates, because the probability right now is for us to stay here in September, but then of course see a hike in October, November, and December for us to stay at 5.5 to 5.75%, almost getting up to 600 basis points in interest rates, and then of course eventually start cutting in 2024. So those are going to be some questions that are very important for the market. I do personally believe that maybe there's one more rate hike left before the end of 2023, and then 2024, depending on the economic circumstances, whether we are in a recession, deflation, stagflation, or an economic growth or boom, that's when the Federal Reserve is going to pivot and of course make decisions off of that as the data is incoming. But nonetheless, going into the following week here, we did see the markets push higher last week. They were up a little bit over 82 basis points. So S&P 500 very, very nicely up. So if you come over to the market here in the month of August, we are still down. So we are still down close to 4% in the month of August. And again, next week, we're pretty much going to be wrapping up the entire month. I doubt the market's going to be higher, close to 4% next week to kind of basically go break even on the month. I still do believe that August is going to be a red month, but it is possible that we maybe do see a little bit of that momentum to kind of get back up to that resistance, which is going to be 44.50. That's going to be another 45 points for the market. But a lot of that is obviously going to be dependent on GDP numbers, earnings, jobless claims, employment report. So this is the head and shoulders that we are forming right now with the left shoulders, head, and a right shoulders. And of course, if you do get up to 44.50, get rejected there, sell right back down. Support level is going to stay put at 43.30, and of course, eventually a breakdown can send us lower in the sub 4,200 levels as well. And I would be very much interested in dollar cost averaging and taking advantage of that seasonality weakness in the low 4,000s. That's where my fair value is on S&P, and of course a lot of individual stocks, in my opinion, will start to come down to very attractive levels if and when we actually do see the S&P closer to low 4,000s. Talking about the NASDAQ here, same thing, almost an identical pattern setup where we have the left shoulder, head on right shoulder, kind of forming that head and shoulders pattern here. Resistance is going to be all the way up to 13,800, so maybe another 200-300 point move to the upside in the earlier parts of the week, and then eventually maybe getting rejected at those levels. We'll find out, of course, eventually, and support level is going to stay put at 13,200. A breakdown below this can maybe send us down to 12,280, and that's going to be a more significant correction for the market of over 14-15%. Again, we'll find out if the dip buyers are strong enough to buy the dip on the markets at these levels, or if we are going to see a further breakdown below. So either way, we're going to be ready. I'm going to be looking at trading options, selling some puts on a lot of individual stocks if we continue to see some weakness and accelerated sell-offs for those companies. And at the same time, we'll be looking at dollar cost averaging at lower prices, at better prices, better risk-reward trade-offs. Again, if you want to get access to all the alerts and what exactly I'm doing, buying, selling-wise, link's going to be down below with that 16% annual discount. And don't forget, we've got one of our biggest sales right now for Labor Day weekend, and that coupon code is going to be Labor4. A lot of individual courses going to be 50% off, and the bundle is going to be 60% off. That gives you access to all the courses with over 120 plus video lectures and lifetime access to all new content as well. So links are going to be down below. Hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. As always, happy investing, and I'll see you all in the next video.